Hi, and welcome back to Retirement Clarity Radio. I am your host, Scott Newhouse, a certified financial planner, and I am so excited you are with me on this exciting topic of Social Security benefits and your taxes. Yes, to the surprise of a number of people that I've spoken to actually and even worked with, there is a chance that your Social Security benefits will be taxed. Currently around 40% of people who get benefits pay income taxes on them. Now, I know what you might be thinking. You might be thinking, Scott, I've paid Social Security taxes all throughout my life. I've seen it on every paycheck, pay stub that I've gotten through all my earning years, decades, and now you're telling me that I could be taxed on it again? Yes, that's exactly what I'm saying. It's kind of like a double taxation. And so what we want to do in today's episode is go through what it entails, how you might be able to either avoid it or pay less of it than necessary. Now, before we get into that, I got to give a shout out to my website, freeretirementbooks.com. Again, that's freeretirementbooks.com. You can get a copy of two books that I've written on Social Security and taxes. So the first is The Retirement Tax Bomb, How to Protect Your 401k from Impending Tax Increases and Create a Tax-Free Retirement. And then the second book, and that book's going to mainly talk about taxes, but it's also going to talk about Social Security taxes in there. And then the second book I wrote is called 10 Steps to Getting What You Deserve, A Guide to Your Social Security and Medicare Decisions. Pick those up at freeretirementbooks.com. You just put in some contact information and then I'll send you a free PDF copy of those books. You can also, if you want to help me out a little bit, you can buy them from Amazon for I think 99 cents all the way up to $4.99. So I will be rolling in the money if you buy it on Amazon, but if you want to get it for free, that's totally fine too. Okay, so let's get into today's episode, Social Security and taxes. How much are your Social Security benefits going to be taxed? That amount of taxation ranges, and it ranges from 0%, so you could pay nothing, and it goes all the way up to 85% of your benefits being taxed. Now, that depends on your income, but it's not just your ordinary income or something like your adjusted gross income. Because taxes aren't confusing enough, the IRS has actually created something called provisional income in order for you to determine whether your Social Security benefits are going to be taxed. Now, you probably haven't heard of provisional income before, so I'm going to try and explain it right now. It's a little tough since it's only on audio. If you want to just Google search provisional income, you'd be able to see this calculation that I'm going to run through right now. So to calculate your provisional income, you start off with something called your adjusted gross income, which you might be familiar with. This is actually on line 11 of your 1040. So this is something that you've been calculating every year when you file your taxes. So you start off with your adjusted gross income, and then you have to add in certain deductions. So things like an IRA contribution, or maybe any payments on student loan interest that you were able to deduct, or any rental losses deductions. You have to add those back in, and then you get something called your modified adjusted gross income. So you start off with your adjusted gross income, you add in some deductions, and then you get your modified adjusted gross income. So that's the first step. Then you take your modified adjusted gross income, and then you have to add in non-taxable interest income, like a municipal bond that you have. You have to add back in that interest. Then you have to add in half of your Social Security benefits, and that equals your provisional income. Whew, that was a lot. So let me repeat that again really quickly. You start off with your AGI, adjusted gross income. You add in deductions, and then you get your modified adjusted gross income. Then you add in non-taxable interest income. Then you add in half your Social Security benefits, and that equals your provisional income. Now, once you have your provisional income calculated, then you need to see if your income falls within the range of you not owing taxes, and then if it does, then you need to see what percentage of your benefits you would have to be taxed on. So if you are an individual and your income is between your provisional income, it's not just ordinary income, it's got to be provisional income. If that's between $25,000 and $34,000 as an individual, then up to 50% of your benefits are subject to taxation. So they would be included in taxable income. Now, if you're married, and again, that's $25,000 to $34,000 as an individual. Now, if you're married, the range would be $32,000 up to $44,000. And if it falls within that, then up to 50% of your benefits are subject to taxation. If it's below that, then you're good. Then you don't have to worry about Social Security taxes you don't have to worry about Social Security taxes. But if you fall within that range, up to 50% of your benefits will be taxed. Next, if you go up to a higher bracket, if you're an individual and your provisional income is above $34,000, then up to 85% of your benefits will be subject to taxation. And if you're a married couple filing jointly, if your income is above $44,000, then up to 85% of your benefits will be subject to taxation. So notice that those are not really high amounts. So there is a chance that you could be paying taxes on your Social Security benefits. I should mention, and this is really important, that you can't be taxed on more than 85% of your Social Security benefits. So it's not going to be the full amount, but it could be all the way up to 85% would be included that you would have to pay taxes on. Also, this is also really important, and it's too complex for us to talk about it on this podcast, but the percentage of benefits that you pay taxes on is on a sliding scale. So you might have heard me emphasize, up to 50% of your benefits will be taxed. Up to 85% of your benefits will be taxed if you fall within these ranges. So that's a sliding scale. It's not just you pay 50% of benefits or you pay 85% of benefits. It could be in that range. So it's anywhere from 0 to up to 85%, and it's going to fall on that sliding scale. It's going to be subject to taxation depending on your provisional income. And one last thing that we need to end this episode on is that there are actually strategies to lower or eliminate your taxes in retirement, especially lowering that provisional income amount. You do need to take advantage of this, ideally years in advance, so that you can plan ahead and make the most benefit from it. I mentioned this before in a previous episode, but one of those big strategies that could help lower this provisional income amount is doing something called a Roth conversion. And this is not necessarily, it's definitely not a recommendation because I don't really know you or your situation, but a Roth conversion is essentially taking money from an IRA account and a traditional IRA, a traditional 401k, a tax-deferred account, and moving it into a Roth IRA years before you start collecting Social Security benefits. Now, the reason why that's so important, especially with lowering your Social Security taxes, is that when you take money out of a Roth IRA, that money is not included in that provisional income calculation that we talked about before. But if you were to take money out of a tax-deferred type of account, like the traditional IRA, your traditional 401k, then that money would be included in that provisional income amount. So that's one of the big benefits of a Roth IRA. It's not included in the provisional income amount, which lowers that income amount, which means a lower likelihood or a lower amount of taxes that you're going to owe on those Social Security benefits. The main strategy there, if you have years to do it, is to get your income below those provisional income thresholds so that you don't have to pay taxes on your Social Security benefits. But, if you're 1 year away from taking Social Security, that's going to be harder to do. So that's why planning in advance for this is so important. If you have multiple years to take advantage of some of these strategies, it's just going to increase the odds in your favor that you can lower or even eliminate the taxes that you owe on Social Security. And like I said at the outset, my next series, and if you're new to this podcast, I try and do around 4 to 5 episodes on one specific topic. So we just did 5 episodes on Social Security. We did 4 episodes on Medicare previously. Our next, 3 to 4 to 5 episodes are going to be on are going to be on taxes, and especially taxes in retirement. So if you're interested in learning more about maybe Roth conversions, paying less in taxes in retirement, you definitely want to subscribe to this podcast. Make sure you come back to it as we dive deeper into taxes in retirement. And again, before I go, if you want to learn more today about retirement and taxes and paying less in taxes, you need to go to freeretirementbooks.com, freeretirementbooks.com and pick up a copy of my book, The Retirement Tax Bomb: How to Protect Your 401k from Impending Tax Increases and Create a Tax-Free Retirement. So that's all I've got for today. I am so glad that you're with me. Make sure you subscribe. Come back as we dive more deeper into taxes so you can pay less of it in retirement. I'll see you next time. Bye. Thanks again for listening. As a reminder, you should consult with a financial advisor familiar with the specific circumstances of your unique financial situation before making any financial decisions. Nothing in this podcast is a solicitation for the sale or purchase of any securities. Any mentions of rate of return are hypothetical in nature and not a guarantee of future returns. Scott Newhouse, CFP, is an investment advisor representative of Forthright Finances, a California and Nevada registered investment advisor.